Well, good morning. It's supposed to be hot today, but it's not hot in here. The markets aren't hot, that's for sure. Something very, 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 very bad happened yesterday. And what happened yesterday in the markets was that on Sunday night, because it's going to be hot and the excitement of the Pro Farmer Crop Tour, the grain markets opened higher. And soybeans were up 25 and corn opened 7 higher and went 14 higher. By the end of the day yesterday, corn was down 12 and right now it's down 4. The reason that's so bad is because when I was a kid, limits in grains were 10 cents. So limit up was 10 cents, limit down was 10 cents. Think about that. Yesterday we opened, we went up 14, we closed down 12, now we're down 4. That's not good. So I'd ask Katie, give me your logo. I'm going to make a PowerPoint. And then last night, here's what happened. This is why I don't have a PowerPoint. One, I don't need one because I got a line of BS like no one else, and it's all up here. 2, we ordered a bed from Walmart yesterday, and the frame came in the bed. My wife and I are still married. You know those things just come with one little Allen wrench, right? So we're in our little apartment in Bettendorf, and she's giving me instructions, of which I realized after 20-some years of marriage, my wife has 0 mechanical ability. And but we got it together, and it was fun. So it was actually fun building the bed, and very, very good bed. Right now, we're telling Katie we have an office apartment in Bettendorf, and we live in a 480 square foot apartment. And at home, I have a 4,800 square foot house. And I got to tell you, I'm not any less happy in this apartment or more happy in my home. It doesn't, if you're with family, friends, everything else, that's really all you need. And I actually like the smallness of the apartment. But I didn't do a PowerPoint because I put together a bed, and I am still married. But when I thought about what I'm going to talk about is that if I could take 20 minutes of your time and help you understand that something dramatically has changed in grains and agriculture. So I only want you to really leave here with one thing, is that Tommy Grisafi from Advanced Trading came here. He works with farmers all over the country. He's traded markets since 1990. I started at the Board of Trade in 1990. I became a member in 93. Is that what's happened the last 15 years, there's never been anything like it, and there'll probably never be anything like it again. But the markets have calmed down. Now, the reason something bad happened wasn't that corn went down 12. We can handle corn going down 12. It's that I'm afraid for the American farmer that your mental mindset's messed up. And Katie had said something, and I'm going to pick on her, not picking on her, teasing her. But Katie said when she got in the workforce, she got a 401k, and the stock market was at all-time lows. So you really only know buying stocks on dips, right? You're not selling rips. The old adage is buy dips, sell rips. You're just Warren Buffett long in your 401k. Corn, wheat, and beans aren't like that. They tend to have these boom-bust cycles, and we just had one of the greatest boom cycles ever. And what's changed, the most important thing that changed, when did we do our last meeting? What month was that? It kind of was icy, sleety. February? In February, my speech was interest rates and operating are going out at 7, 8, 9. And you can make 4.5% in a CD. Those numbers have changed now because interest rates went up a few more times since then. And now operating's going out at 9, 10, and 11. So you are either paying 9, 10, and 11 for money, which simply put means every $1 million you borrow, by the end of the year, if you're paying 10% interest, you owe $100,000. Now the average American's only making $52,000 a year. So if you borrow $1 million, you're going to owe in interest twice what the average American makes in a year. If you have an extra $1 million and you put it at a bank, there's a cute little bank right outside here, they will give you 5%. So what's changed in just the last year in agriculture is that we've had really, really big boom cycles in corn and beans and wheat. And anytime grains go up, it provides a lot of capital for innovation. Is that a true statement, Scott? Why is that a true statement? I'm only asking you a question so I can get a sip of coffee. Go ahead. But the last time we did this, it brings in like dollars for innovation. Is that correct?
Yeah. So the people in Silicon Valley think the farmer is rich, and they want this money, so they'll dream up everything possible in an attempt
Good answer, sir. Good answer. We have a door prize for you. I got a rain gauge for you. And there's some crazy things happening with technology that's going to benefit farmers. I'm not here to tell you grains have to go up because we can't plant enough. You're here because you're in the bushel business. The employees here and the workers and the owners here are in the bushel business. I'm not upset that the markets are going down. I'm only scared for you because this time as the markets go down, you're going up the treadmill. So just like our friend Randy Dowdy said, he's got the widowmaker and he needs open heart surgery and thoughts and prayers. In agriculture now, every day of your life, you're not walking at the treadmill. You go on vacation, you tell your wife you're going to go on the treadmill and you're just kind of watching TV. The treadmill's at an angle now. And so the economics of agriculture, if you get anything from today's meeting, the economics of agriculture is you are on the treadmill at a good pace. And it's going to be like that for quite a while. I would have told you in February, interest rates are higher, they're going to calm down. They are not calming down. They're not going to calm down because what our Fed would have to do to nip inflation would also kill our economy. So if the Fed truly wants to go, and there's only a few of you old enough to know, but if I say the name Volcker, there's a few people giggling and a few who don't think that's very funny. If the Fed wants to go full Volcker and nuke it, hence the last time land in Iowa was $1,400 an acre and went $600 an acre, they could do that, but the medicine would be, it's like chemotherapy. The chemo may help you, but it may kill you also. And so if the Fed does what they need to do, they're going to really hurt the economy. And so the Fed's just gently at 5.5%, 6% on this Fed funds rate. It's definitely hurting commercial real estate, homes. People like me aren't going to flip out of our house and go buy another house and get a new mortgage. We're just going to kind of stay where we are. It's going to start to affect land prices. The conundrum in agriculture is this. We've all lived through highs and lows in prices, but not many people here, especially the young people, have dealt with a 10% interest rate and a corn that opens up and goes 14 higher, closes 12 lower, and it's down 4 right now. And so I wrote down the prices of corn for all the years coming in here, and D's 23 is at 4.82, but that was before I came in here. It was up a penny. So I'm going to lower 4 cents off of all these. D's 23 corn's at 4.80. D's 24 is at $5. D's 25 corn's at 4.95. And D's 26 corn is at 4.95. So for all the people who are mad that the Pro Farmer crop tour's out there and they're walking through my fields and trespassing and they took 2 ears out of my field and they told people the yields were good, I can tell you a secret in this room on air, but don't make this a YouTube short. No, you can. Anyone who is complaining about price, I promise you, has very little sold. Anybody complaining about the price of corn and beans for 2023 has very little sold. Because if they were aggressively sold, they'd say, well, of course, there's a good yield, we're good farmers, the genetics are good. And so when people call me and say, hey, I don't work with you, I still have some corn from 22, what should I do? I don't even know where to start. I don't know to tell them well, they don't work. I don't work with them. I said, well, you're not paying me. And you've watched corn go from 5 to 7 3 times here in the last 2 years. Obviously 7 wasn't high enough, but 4.75's got you scared, right? And the Ukraine war, we were in a bull market for various reasons. And I love bull markets, but bull markets in ag, the price goes up and it stimulates for the world to produce more grain. So the worst thing I have to tell you is that the very benefit you got from these higher prices from the Ukraine war are going to come back to haunt you for many, many, many years. And the only way we're going to be able to win this battle is with the bushels. And I didn't get paid to say that, although I hear I'm getting a nice dinner tonight, and my daughter was invited also. So maybe I'll say, no. I mean, we're not going to be able to fight out of these low prices by cutting back on inputs. It is not going to be the answer. So we got to put our hat on, say we're in the bushel business, but we have to manage the risk of that bushel better moving forward. I've just told you the price of corn pretty much is 480 to 505 for 4 years. You may say, that's not right, it's going up. Well then, open a futures and options account and go buy 100 futures. And, and if you did that last night, if you paid unchanged for 100 corn, you'll have a significant loss with corn down 4. I meet farmers from all over the country who are holding too many bushels because the market's shooting up on the Ukraine war. They were sold, they were hedged. That feeling of the market exploding for something that's never happened in our lifetime makes you not want to be a seller. But there's not a single man, woman, child in this room who makes money growing corn. You only make money selling corn. So I'm not here to tell you how to grow corn. I'm not here to tell you how to get great yield. I'm here to tell you because what's happened in the last few years has changed your psyche and you forgot how to be great at selling corn. Now I'm sure if I went to the Casey's, there's some guy over there right now drinking coffee telling everyone how damn smart he is, all right? Every town in every country has them. A Casey's, that is. No, the jackass telling you how smart he is. I get it. And maybe there is. Maybe there is that guy who's great at selling, protecting. That's fine. But most of us, because it takes so much work and energy to grow a crop, the very hardest thing to do is let it go. The only thing I can compare it to is we have a daughter who goes to St. Ambrose in Davenport, and we just dropped off our other little daughter at University of Kentucky. And it's hard to raise something for 19 years and just say, here, good luck. We got you an air fryer and a little fridge, and you're going to have to figure out how to wash your clothes, right? I was telling Scott, my daughter, Gabby, my littlest, she won state for gymnastics. If you Google Gabby Grisafi state gymnastics, she won the all-around, she won this, she won that. 10:30 last night after we put the bed together, Gina's explaining to her how to wash clothes. The worst grade this kid ever had was a B in high school. She's a state champ, but we coddle our kids. And I think you're coddling your corn and your beans and your wheat. Well, there's no wheat around here, but in North Dakota, where a lot of my clients are, there's a lot of wheat. And if you want to film an episode of Hoarders, go up to North Dakota. They got birthdays for their bins for their wheat. Because the worst thing that ever happened was wheat went from $5 to $25 in 1 year, and they're still screwed up from it. And we kind of did a little of that last year. We went from $6 up to $14, and there was, I know so many farmers who sold nothing. So my message today, my point is, it's not that scary or not normal that the prices and the markets are going down. What's scary is the interest rates went up. And the largest check you're probably going to write in the next few years, you'll never take out of your checkbook. I'll repeat that. The largest check you will write in the next few years will not come out of your checkbook. It will just come out of that the net money you could have had for your grain at some point in the year you won't get. So my advice for you all before I wrap up is whether I work with you or don't work with you, continue to get educated, continue to be an aggressive seller. When we spike open on a Sunday night, if you don't have offers at the elevator, you're definitely not going to be brave enough. There's not one person in the room who said, I didn't want to sell it when it was up 14 Sunday, but I pulled the trigger when it closed down 12 on Monday. No one has that ability to sell into lows. And like Katie knows, and it's not her fault, but from a stock market perspective, you just buy. Warren Buffett bought. Warren Buffett buys stuff, doesn't sell it, and over time it appreciates. But the one thing that's changed in the last few years, and it is affecting the stock market now, is that the reason the stock market went up so much, so high, so fast for so long is because interest rates were artificially held at zero. And the reason the ag economies had the greatest boom ever was that interest rates were artificially held low. And we are coming out of that time. We can no longer afford to keep interest rates artificially low. Before I walked in this building, before I wrote my speech, which I haven't looked at yet, besides prices, I got a tweet that said 10-year high of the day, highest price since 2007, 2008. Interest rates are still going up. It's going to affect the economy. I personally think, if I can give you one recommendation before I eat that donut and go work on my Widowmaker, is that if you've messed up 23, if you're growing the bushels, you didn't mess up. But if you're disappointed where prices are, there's still time to get 24 under control. So 2023 crops trading 480, but 2025 is trading 505, 510. On Sunday night, Dees 24 corn traded 520. And you may not think those are great prices till I come back here in a year and that Dees 24 is at 420. And you're going to say, what the heck's going on? Interest rates and operating are high. Corn's broke another dollar. I wish someone would have told us. Here I am. Because the mathematics of what's happened with keeping grain prices so high for different reasons, a drought in South America, a Ukraine war, a production problem in America, a drought in Canada, a drought in America. As the world fires up and starts producing a lot of grain, and we've had another technology bump in grain production, we're going to overproduce. And lower prices, I'm not here to say grains could go down. I'm here to tell you grains are going to go down. What day, what week, what month, not necessarily sure on the timing. Grains can also explode back up, but explosions are going to be a lot smaller than they were. Like a big rally would be that we go down to 475 Dees corn and we come up to 550 at harvest. And I don't know what your local cash markets are around here, but it's a very healthy cash market. You have a lot of choices of where and what prices you could sell grain. The number one thing farmers say to me when we go below the cost production is that, well, I'm not selling grain, it's below my cost production. I said, remember when the Ukraine war started and your cost production was $5 and you sold $8 corn? You sold it $3 above your cost production. Why can't we mentally understand that we may go multiple years and sell corn 30 cents below our cost production? So before I end, I'll leave you with this and open it up for questions. You have to understand in your mind, how many years can you go with making zero money? For some of you who own land, you could go decades. The wealth came from the land. It's always been about the land. The bushels are fine. I know very, very few farmers who own very little land and are just so great at production agriculture that they're massively wealthy. The wealth came from being able to buy land. Growing grain is just a byproduct of that. That's my opinion. You may say, someone may come up to me and be like, no, I know this guy, he farms 6,000 acres, he only owns 80, and he's killing it. I don't think so, because the math of that is going to be so hard because he doesn't have as much working capital to deal with. So land prices have exploded. You've all benefited tremendously from inflation. Inflation, if you're a farmer, wasn't necessarily so bad because you own so many assets. You own land. I'll give you an example like this very building. How long ago was this building built?
3 years ago? 4 years ago? Something like that.
Okay, regardless of what it cost, from 3 years ago, if you rebuilt this building now, how much more would it cost to build?
Twice.
How do you know that?
We're looking at another building.
So I'm not completely full of it.
No.
Can I leave now and get my donut? But you own this building, right? Yes. So when you own stuff and we have inflation, it's kind of good. Don't tell everyone that. But if you own land, you own grain, you own equipment, you own bins, you own cement, you own this, it's not a bad thing when it inflates. The problem is when you say, our business is this big and we want to double it, that's the problem. Because if you go borrow money, that's tripled. It's went from 3 to 9. And if you go to build the building, it's doubled. So the cost of agriculture moving forward has went up, but your prices look to plateau. And that's why it's going to be very important to understand how to manage the risk of a bushel. I'll leave my speech with this. Store and ignore has officially ended. You will get punished terribly for holding grain for multiple, not necessarily months, but multiple years. It will become incredibly expensive. Okay, with that, questions, comments? We'll let the next speaker go. Is anyone upset? You're upset? Why?
No.
Oh, yes, sir.
The store grain every year. I mean, when you consider your value of money and blah, 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 and, the condition of the grain, what do you think it costs the average farmer to store grain?
It's tricky. I asked Kurt Struber, who you know personally, I said, Kurt, as a commodity broker, at Advanced Trading, we work with elevators, we work with farmers. And I work with a lot of North Dakota farmers who have to store grain, right? Their source where they sell corn or beans is sometimes, this is going to blow your mind. I work with farmers who sell 1 million bushels of corn and they deliver it 120 miles away. That has to be like, really? Yes, but the economics work. And you can't deliver 1 million bushels of corn at harvest when you only have a few weeks or a month to get it out. I know this, I'm not a very smart guy. When you put 100,000 bushels of grain in a bin, you don't get 100,000 bushels out, is that correct? And that's called shrink. And it's very hard to get labor. So when that guy drives the truck, or gal, drives the grain to the bin and runs it up, and you use electricity, and you turn on the fans, and you do all these things, and then you have to reverse out of that, labor's become a problem. Not only in ag, but in America. And so it's a very difficult thing to calculate, but I think it would blow your mind if you actually figured it out. So if you sell corn at harvest 50 cents lower than where it seems to be 9 months from now, it might be the same number. And I don't have it to the penny, but it's way greater. The cost to carry grain has went up tremendously. Let me put it in a cattle perspective. It has never been more expensive to produce a pound of beef than now, today, in the cattle industry. And that's very difficult for some cattle producers. Because although the cattle run's been very good, if you went to an auction today, this young man over here is the auction, I go buy a load of cattle, the numbers don't make sense. I just talked to a farmer about this on the way here. I go buy a load of cattle today and I go feed them, I'm looking at significant losses. And the hardest thing as a businessman or woman is to go into the next year knowing you're looking at losses. And so when you're looking at losses, it freezes people up. And the exact number of how much it costs to carry a bushel, it's way more than it was in almost anyone's lifetime here, because of what's happened. And I don't want to get in the COVID thing, but my brother was supposed to be here, and he's not here because he has COVID. And I told him, you don't really have COVID, you have sounds like you have a bad cold, right? And he feels fine, but he's like, I don't think I should go. I'm like, well, then don't go. But this isn't going away. Like the labor thing, the having to take days off because you have COVID, it's a struggle. It's a struggle in agriculture, it's a struggle in America. And I don't want to say anything bad's going to happen. I mean, who in this room can tell a 1980 story? That was bad. That was bad, bad, bad. I guess guys were in business and just a few months later they were just like out of business. We're not anything like that. We're just going to have like a going backwards period, and it's going to become uncomfortable. It's going to make you all angry. You're going to look to blame someone. It's not my fault. It's not the end user. It's not the people who are selling you the stuff's fault. But the marketplace is changing. So remember this. Interest rates were artificially held low for 15 years. We are out of that cycle. And although lower prices bring in demand, like we sold a bunch of corn this morning to Mexico, they also have to use money that's being borrowed at 10% to buy that corn. So the economics of everything's changed. It's going to affect your business tremendously. But I don't know that you can, how do you educate a farmer who had a chance to sell $7 corn and wouldn't sell $6, wouldn't sell $5, and then calls me at $4.75 and says, what should I do? Do whatever the hell you want. It's what you've been doing anyway. It's usually what I say, because they weren't going to become a client, because they weren't listening before. And I'm not here to argue with them, because they're wealthy beyond belief. You're just a little less wealthy, that's all. That's all that's happened. Nothing bad's going to happen. You're just going to owe. The good news is you're going to owe less in taxes moving forward. Doesn't that make you happy? Because I know farmers and they hate paying taxes. All right? So that's my message today. Good news, you're going to owe less in taxes moving forward. Any other questions or comments? Yes, sir.
With all the dynamics you just explained, any changes, what kind of changes would you make in terms of your marketing strategy, bushel, months out, years out, whatever?
Okay, I was hoping to have a question like that or explain that. even if you start forward selling and hedging at small losses, you could defend that quickly. So before I came in here, I put a very large trade on for a South Dakota family, and they protected 200,000 bushels of 2024 corn because they know they're going to be a farmer in 2024. And one of the things I think enabled you to do a poor job of marketing this year was that you had that 591 crop insurance level, and you still do. No one's taken that away from you. But the 591 level mentally made you think you have that floor, agreed? And now we're at 480, 478 right now, and you're like, oh, I got 591 floor. You kind of, on 80% of your average production. If you have way above average production, you don't have that floor on any of those other bushels. So I can tell this room with 100% certainty, I can't predict price, but I can predict you do not have a floor yet for the 2024 growing season. And I think the best thing you could do right now to stop the bleeding would be get in control of some 24 grain. You say, but Tommy, if I sell 525 corn in 24 and the market rallies, it's going to upset me. And I understand. Especially if your neighbor who's at Casey's did nothing, tells you sold it at 625. But if 525 grain becomes 425 grain, becomes 325 grain, and nobody has anything done, it's gonna come in on itself. And the best thing I think you could do right now is you have your price for 23 is to start to get in control of 24. Now, if you're scared to sell 24, you can go buy a call option right on top of it and catch some of this upside if you think, like we could have a production problem in South America and explode. We could have something escalate in Russia and Ukraine and explode. But when I spoke a few months ago, Russia and Ukraine were fighting. The market's dropped tremendously since then. They're still fighting. It's not getting better, it's getting worse. And even with everything, what should scare the heck out of you is even with everything happening in Russia and Ukraine, the markets are still dropping. That the whole world is overproducing and making up for the Ukraine. If Ukraine ever got back on board, which would take quite a long time because they have to get all those mines out, we're going to have way too much grain. 1 year of higher prices of grain usually gets you 2 or 3 years of lower prices. We've had 3-4 years of higher prices. It should get us 4, 5, 6 years of lower prices. So get in control of 24, whatever that looks like in your head, right? Yes, sir. Well, very few, because they still don't know it today because they don't know their final yield. And so cost production's this. And you really don't know it till you back into your books the year before. It's an impossible question, right? But they have a good idea of their average price history. And they have, or not average price history, your APH, your average production. And you really never know your cost production until the end, and then you do.
So it's a better question, do they have an expectation of what they want for income so they can plan better?
It's interesting because younger clients who don't own a lot of land know those numbers, and to your question, have that way more dialed in than a wealthier landowning casual cavalier farmer. So a farmer who owns 2,000 acres paid for in cash in Iowa from multiple hundreds of years of hard work that's worth 20,000 an acre, I don't think they care about their cost production. Their cost production's so low that they're like $3 cost production if they don't charge themselves rent, right? Assuming they're not backing in $500 an acre rent. And so if they sell cash corn at $5, $5.25, $4.75, they're still like okay. It's the young guys who the numbers are tight who really have things dialed in. So when I sit at First State Bank, I have an office at First State Bank in Mayville, North Dakota. The young guys who have kids growing up, bills to pay, a child going to college, they'll actually come in and say, I think my cost production's here. I locked in crop insurance here. I have this much sold here. Can you buy me a floor with puts here? And at least we're getting, like, we have a patient who's a little unstable, and we're doing a little triage and getting it under control. Now, while all that's happening, Mother Nature's like, hold my beer. I'm not going to rain for 6 weeks, right? So you can know your cost production, but if we don't grow the bushels, you got a different cost production instantly. If it doesn't rain again in the state of Iowa or Illinois here for the next 3 weeks, you're not going to have as big of a bean crop. And so your cost production's changing. Is that a good answer? That's the best answer I can give you. Okay, thank you. Good question. Thank you for asking. Any more questions or comments?
I realize it is an impossible question to answer, but how do you see an end to, do you see interest rates coming back down anytime soon?
Can you repeat the question?
Sure. The question is, do you see interest rates coming down anytime soon? Well, great question. A little bit answerable because we have interest rate products. At the Chicago Board of Trade, we trade 30-year bonds, 10-year notes, 5 years, 2 years, T-bills, and those are hedgeable assets. And if you were developing a new subdivision somewhere and cutting 80 lots and you were scared of interest rates shooting up, the interest rates are still hedgeable, but they seem to be staying higher for longer than one would have thought. Think of where we were if I was sitting here a year or two ago. The number one word would have been transitory, 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 transitory. And we went from 2 weeks to figure out the cure, just stay home for 2 weeks, we'll get this covered. 550 days later, they took off the whole thing, to inflation's just transitory. When there was an election, inflation was transitory. Once they won, hey, we got a problem, we have inflation. I mean, it was always brewing. And so the 15 years of artificially keeping things low, not only in America, but Japan, Germany, China, when we came out of that, it's very difficult. And so the only way to control inflation is to raise interest rates, and I don't think we'll raise them enough to hurt the economy too much coming in the election, but we're hurting certain sectors. And so if you did have an interest rate risk, the ships probably sailed on hedging them, but we still may have more inflation coming. I remember a few months ago, I filled up gas, it was $3.50. I filled up the other day, it was $4.20. Gas is a major expense to the average working American. Food, still expensive. Maybe not that the price of the commodity of the corn and the cornflakes is high, but the fuel, the transportation, the cardboard box, the person to drive, the person stock it, expensive. So we were told inflation would calm down and we're going to start easing, but when you look at the structure of the market, or when I receive a text right before I came in here, the 10-year note made new highs 30 minutes ago, the highest point it's been since 07-08. So not only is it not calming down, look at it like a child with the, who has kids here? Who's ever had a kid with the flu? You give them Tylenol. Then when you're really scared and it's midnight, Tylenol, Motrin on the rotation. If you're really scared, you're going to the ER. We've all been there, right? My kid has a fever, Tylenol, it's not going down. Cold water, not going down. Motrin, it's not going down. You go to the hospital. Well, inflation's kind of like that. So they hit it with a little Tylenol. Oh, we still have it. Hit it with a little Motrin. No one's going to admit we have a problem, right? But we all know we have a problem. And it's really going to affect growth because, like this young man back here said, to duplicate this building is going to cost double. And that will stop people from building buildings like this eventually, right? So you'd have to really be profitable to slap up buildings. Another question? Yes, sir. We're $5 a question now. We're at the $5 question mark. Free questions are over.
After me.
After you. Bonus round.
Do you keep tabs on the renewable diesel fuel industry and where that's headed or no?
No, I get excited when I see the map of all these plants that are going to open, but then when someone explains the map that one's not going to happen, that one's not going to happen, that one's not going to happen. I do know where a lot of my customers are in North Dakota. I think we're going to get a plant in Castleton, North Dakota, and we're really excited about that and how that'll change the structure of the markets. But from a grain elevator perspective, if you're a grain elevator that's been in North Dakota for over 100 years, you are pissed that someone just opened something that's going to, like in the old days, I was a grain elevator. I've been here for 100 years. You sell me grain. And now this soybean crushing plant's like, you hold your grain for 3 months and I'll pay you a lot more. And the elevator's like really upset about it. So from Advanced Trading's perspective, we've seen it as a disruptor of cash markets, benefiting farmers, upsetting elevator profits and margins, and how grain flows through the United States. Because really all I care about, Tommy Grisafi cares that his one, clients grow bushels, and two, they sell them. Not always profitable, but we grow bushels, we sell bushels. I'm noticing the change of flow of bushels changing, and that some people are storing soybeans who used to not. So all the soybeans we go at harvest, the market is absolutely demanding that you keep some of those, because the renewable diesel plant is not in the storage business, they're just in the oil business. Does that make sense? That's all I know about that. Great question. Another question, comment? All right, well, thank you. I'll be right in Bettendorf the next week, and if anyone needs anything, feel free to contact the Advanced Trading website, search for me, and it's always a privilege and a pleasure to come here, even if I have bad news. I couldn't come here and lie to you. Thank you so much.
Lead Academy.
Liqui-Grow
Excellence
and agronomy
Development.